Hi there, welcome to Kneppy Invest and welcome to May the 21st, 2024. We do have about or just over 1 hour of trading left, and overall, it's been a mixed day. Both major indices, ASX 200 and the All Ords, down a tiny bit, just a touch, but the small Ords and All Tech are both up. In fact, All Tech is up over 1%, and resources down a little bit as well. But apart from it being a so-so day on the market, another busy day in terms of announcements. In fact, quite a few companies released full-year or half-year results today. So sort of like another mini August or February, which is understandable because May and November do tend to be, and we do see another peak in financial results in those months. And many of these companies are New Zealand-based companies. And a few companies did release trading updates. I have come up with the top 5 announcements of the day, and I will discuss some of the honorable mentions, companies that did not make it into this list. Now, I'm also going to be tracking the share price of Jupiter Mines. Share price down 9.3%. And the reason it's down is because someone sold some shares. Sale of Jupiter shares by AMCI Group. And I just think this is a possible buy the dip situation. So share price in a beautiful rally. I'm pretty sure this is manganese. And the South 32 manganese mine has been affected by a tropical cyclone, I believe. And it could be over a year before that particular mine gets back into operations. And this could be an interesting play. And that's why the share price is on a beautiful run. And just because the share price has dipped back today because of panic selling, because someone decided to sell some shares, this is a possible opportunity to buy some shares. So I've put in a bid at 32 cents. I was thinking of just buying at 32.5 cents when I made the decision, but I just want to see if my order is hit somewhere down here. Not a big stake. So just an initial position, and then if the trade keeps going up, I'll add to my position. That is my plan. So maybe I should have just bought in at 32.5 cents. I'll just wait until the end of this video, and the share price hasn't moved at all from where it is right now. Maybe I'll just buy in at 32.5 cents. So interested to get into these sort of companies where the trend is in the right direction, and there is positive sentiment in this particular space. So for that person who complained, I didn't talk about resources yesterday. Who was it? Someone here. Gazmo, good day for resources, but I only talk of data and tech. And I think the only reason I only talk data and tech because those are the companies that released really important, powerful announcements that caused the share price to rally 20%. The reason resources had a good day is because commodities went on a rally, but individual mining companies didn't release anything of note. That's the big difference there, Gazmo. That's why I didn't really talk about resources yet or yesterday. And maybe I will talk about resources today. A couple of companies that did get onto my radar, but the vast majority of companies today are not mining companies. And to be honest with you, I don't focus too much on mining companies because they're price takers. They just follow the movement of the underlying commodity. I have no idea which way the underlying commodity is going to go. And I can't really read drilling results effectively. I'll call myself amateur on that front. And when a share price of mining exploring company goes up 100%, it could go up another 100% or down 85%. I have no idea which way it's going to go. And a lot of those companies, those mining exploring companies, do become playthings for day traders. And I don't want to get into that sort of trading. Okay. Little rant over. So the agenda for today is I'll talk about the ASX today, have a look at the sectors, indices, talk about the 5 top announcements of the day, also go through some of the honorable mentions, some companies that did not make it, also have a look at a few companies mining, exploring companies that had a really good day today. But then I had a look at the chart and I went, there's no way I will ever take a position in either of those companies. And you understand why when we get to that point. The other thing I'm tracking is my share site, my technical portfolio performance, up 59.99% last time I checked. I just wanted to see it get up to 60%. Very close yesterday. I'm just going to refresh it again. Maybe it's at Come on, 50. Come on. Oh, 59.92. Okay, that's okay. It's eventually going to get to 60%, but I definitely want it to get to 60% by the end of the financial year, which is still well over a month away. So should get to that point. All right, let's have a look at the ASX today. Not much has changed since I started this video, but let's have a look at the different sectors and indices. And I'll probably assume that most I was going to say most sectors. I was going to assume that it was like an even split between which sectors were up and down. There was going to be even split between sectors up and sectors down, but it's not. 3 sectors down, 3 sectors up, sectors up. Materials, again, bad day. Telecommunications, bad. Healthcare, bad. But IT's had a really good day. So maybe I should talk all about IT today just because that's had a good day. I don't talk about individual sectors in indices. I want to delve into individual companies because that's what I buy. Industrials, good day. Staples, good day. And if you look at the indices, yeah, Alltech has had the best day by far. And in fact, quite a few indices are down, including or ordinaries. Let's have a look at the ASX 20 just to see how the biggest 20 companies have performed on the ASX to see if there has been some interesting movers. And most companies are down today, which is understandable. The ASX 20 was it down a little bit? Down a little bit. Best performing company in this group is WiseTech, followed by REA Group. Understandable. IT or tech companies. Then we have Woolworths, Aristocrat, another good day by that company, and a few mining companies here, BHP and Santos. And the worst performing company is Telstra. In fact, Telstra made it onto my honourable mentions. They actually did release an interesting, quasi-interesting announcement today, and Rio Tinto, Fortescue there. So the complete opposite to BHP. So I would probably say that iron ore was slightly down. Let's have a look at the best performing and worst performing companies today. And quite a few companies that are in my top 5 should be in this list, either by percentage change or by market cap. So let's have a look at the top gainers. I would expect 2 companies to be, hopefully 2 companies in the top gainers and 3 companies in the top losers. So by percentage change, we have Sierra Nevada up 82.93%. This company did release an announcement today. I'll quickly chat about this company because it's a mining company and you can complain all you want. But to satisfy your thirst for mining companies, how about Sierra Nevada? Wonderful mountain range in Western United States. I'm pretty sure it's the Cascades, then Sierra Nevadas. Yeah. Anyway, this company, Sierra Nevada, to follow up 1,270 grams per ton silver intercept at Black Hawk, USA. Fair enough. Again, I can't read that sort of announcement. It looks good. 1,270 grams per ton. That sounds absolutely stellar. What about the chart? And this is the most important thing for me in regards to these companies. Is there any positive sentiment around this company? And you might be surprised that the answer probably is no, even after today. Share price of this company is in a well-defined downtrend. Even after today, with a massive volume, share price not long ago was higher. So it's up 80%, but over a month ago, it was higher than it is today. So share price of this company, so this is a recent IPO. Looks like they listed back in 2022, and the share price has fallen from 46 cents down to 7.5 cents. Whether the sentiment in this company will shift to positive from now remains to be seen, because a lot of investors in this company have bought in at higher prices and they want to get out. They don't care about this announcement. They just want to get out. Anyway, so there's a company I've never heard of before, Sierra Nevada. Looks like it's a silver exploring company. There was another company I wanted to look at here, and here it is, Flynn Gold, up 33%. So Gibb River Diamonds and Carno, but I'll talk about Flynn Gold. Those other 2 companies beat it. Flynn Gold up 33%. This is another company that released an interesting announcement. If you're a gold bug, I'm assuming this is gold, yes, 64 grams per ton gold in high-grade veins, not talking about a person, in gold at Golden Ridge Adit, northeast Tasmania. So nice reaction from the market. However, is this a breakout? The whole reason I'm doing this is I'm looking for breakouts. And I'll get to one company that I think is breaking out today. And in fact, there was a comment here. First comment here by Fishball. Actually mentioned it. There we go. So this is Fling Gold. And again, no interest in this company at all. Share price in a well-defined downtrend. Not really good volume coming in today. Maybe that's the only saving grace. But again, many shareholders in this company want to get out, and they have the opportunity today. Looks like I'm going to have to take a drink now and again because I don't feel sick, but my throat is showing symptoms of me feeling sick, but I am not feeling sick at all. Just the throat's doing weird stuff. Let's have a look at this. Let's have a look at this. Come on, 60. It's probably 59.8 something now. Nope, same level. All right, so let's have a look. Who else is on this percentage change? And there it is. In fact, the company coming in number one is on this list. Findi, up 24.34%. That's exactly what I'm looking for. And that's on the back of the company releasing their full-year results. So I'll talk about that company later in the video, actually towards the end of the video, because it's in number one in the top announcements of the day. I'm a little bit surprised the share price has run like that because I looked at the results. I am a share of the company. I looked at the results and I went, okay, they're okay. They're not absolutely throwing your hands in the air or arms in the air going, wow, this is the most amazing announcement you've ever seen. So let's have a look at by market cap. And I'm hoping another company, there's OFX Group, up 14.75%. Yeah, this company also released their full-year results. So again, I mentioned we're in sort of like a mini August and February where quite a few companies are releasing their full-year results, including some of the highest quality companies on the ASX. Hello, Technology One. They released their half-year results, not full-year results, half-year results. So OFX Group and Findi, both companies I expected to be in this list of top gainers, did make it into my top 5 announcements of the day. Findi at number 1 and OFX Group at number 3. News Corp is here for some reason, although that's NWSLB. No idea what that is. It says ETF. Any other companies here? I'm trying to remember if any of these companies. Pure Hydrogen did release something here. Can't remember what. Oh, Vulcan Energy, by the way, had a pretty down day yesterday, so a lot of volatility in Vulcan Energies. I did take profits at the beginning of trading yesterday, maintaining my small position in that company moving forward because I think it could go on another run, but I'm just not absolutely sure about that. Let's have a look at the top losers, and I'm thinking there might be 3 other companies in this particular list. Atomos is not one of those companies. Shares in this company have been suspended for well over a year. They did a massive capital raising. Company was under trouble for some reason, down 64.62%. I actually don't mind what the company does. They produce or create or manufacture this device you put on your camera or your phone or whatever to make better products. I don't know. And Sun Silver IPO the other day, and that's going to be volatile. And there's James Hardie, down 12.26%, and that is on my list, coming in at number 2. And that company did release their 4th quarter results. And they just after James Hardie, we have Enero Group. That comes in at number 4, down 11.4%. That company released, I believe, a trading update. And just based off the share price movement, the trading update is negative. Not seeing the other company, and there is a chance the other company's share price has bounced a little bit. So let's have a look by market cap. Oh, no, there it is, Sonic Healthcare. Only down 5.6%. It was down by over 10% early in the day. Star Entertainment Group has pulled back a fair bit, 7.4% because just rumours of takeover bids yesterday saw the share price rally. And that's not a sort of an announcement I am going to even think about taking a position in a company on rumours or speculation the company could be bought out. No idea if it's going to pan out. And I can't see any other companies that released announcements today. So let's have a look at the top announcements of the day. But before then, yep, there we go, 60%. 60 point. Doesn't mean it's going to stay above 60%. It's going to probably go up and down above, but I have not seen it above 60%. So that's why I've been refreshing. I just wanted to see it get above 60%, just so I can say it's now up 60% since the start of the financial year. Go technical analysis. Let's have a look. But before we have a look at the top announcements of the day, let's go through some very quickly. And in fact, what I won't show you the announcements. I'll just do the charts for these companies. First one is Infratil. They released their full-year results. I'm a little bit surprised the share price is down today. Was it down 5.3%? Chart looks pretty good. I'm pretty sure in their announcement they mentioned that they beat guidance. And I thought, wow, they beat guidance. Share price should go on a little bit of a rally. Share price has been on a rally the last 3 days. And I saw that as well as a sign that there were loose lips. Someone saw the results, some insiders, maybe, allegedly by me, maybe spuriously. And that's why the share price had rallied. And then for some reason, share price has pulled back today. I have not done any research on this company. However, I did have a look at their announcement and they saw the words data center in it. This company has data centers. It's an infrastructure company. And just by looking at the chart, I should do research on this company. I think I've mentioned that in the past, but this is an absolutely beautiful weekly chart. So I will do some research on this company. And one of the reasons why is because they have data centers. So a possible data center play for you. Markup is 8.3 billion. Another company that released interesting result was ALS, ticker code ALQ. They released their full-year results. Share price actually did rally on this. So nice little rally, up 5.6%. And this is a breakout. Breakout alert, ALS Limited. Share price was in this little zone here, this what do you call it, purple box, which was a resistance zone. And today the share price has gone above that resistance zone. So obviously, even though I've not had a look at these results, the market's liked it. And this is the definition of a breakout. Apart from one thing, I would like to see higher volume. We haven't seen big volume coming through today, and that can be a negative sign. No, we're looking at the weekly chart though. Let's have a look at the daily chart. There we go, that's better. And we do see higher than average volume. I take that back. Some good volume coming in today. Not massive volume, but this does look like a really good breakout. So I will put this onto my watch lists. And I should be taking positions in any company that breaks out like this. That should be my philosophy moving forward. Not all of these trades will play out, but there is a greater probability that some of this company's share price will go on a pretty big run, particularly if the company is good value. There is a relationship between the performance of these breakouts when it comes to based off valuation. So companies that are significantly overvalued more than likely won't go on a significant run, but companies that are really undervalued have the possibility to go on long-term significant runs. So research has been done on that. So that's ALS Limited. I'm pretty sure they do what do you call it? Samples, stuff like that. I think it was mining and health samples. Testing, that's it. Testing, yeah, testing. Operates through the following segments: life sciences, commodities, industrial. So analytical testing, that's it, analytical testing. So ALS Limited. And then we have Telstra. I can't remember what Telstra released, but they reaffirmed financial year 24 guidance, and then they released financial year 24 guidance as well. And based off the market reaction, not much. Share price down 2%. Now, just looking at this daily chart, share price in a pretty well-defined downtrend. And today the share price tried to get to a long-term low. Now, with a company like Telstra, I do prefer to look at the weekly chart just to see where the share price is based off historical lows. Now, Uh, when you do go through history, share price of Telstra can be quite volatile, and you can just see by looking at this longer term weekly chart, the time to buy Telstra shares is when the share price gets below about $2.80. It's done it 3 times in the past 14 years: 2010, well, 2010, 2011, 2018, and then during 2020. Right now it's 360. So it has a little bit to go from here. And I still remember back in 2012, 13, 14, Telstra was all the rage on your money, your call on Ausbiz, because look at that beautiful uptrend. But again, I don't think this is a company you own for the long term. It's not going to grow all that much. So have a look out for Telstra's announcement that was released today. Now we go to Technology One. I am a shareholder of this company. They did release their half-year results. I have not gone through these results yet, even though I'm a shareholder of this company. But again, a beautiful looking weekly chart. This is, compare this chart to Telstra. Which would you prefer to be in? The answer should be Telstra. It should be Technology One, not Telstra. It's more expensive, this one, Technology One, in terms of P ratio and valuation metrics, but there's a reason behind that, because there's more likely to be significant growth in this company in the future. Now let's have a look at the daily chart just to see or get a different perspective. And share price is up 5.4%. So the market has liked it, but it seems like at one point today the share price was down. So it looks like there has been a bit of a shift in sentiment. And what a ridiculous first, we'll call it the first 30 minutes of trading. Share price up significantly, down significantly. I would say that was an institution just dumping on market for about 10 minutes. Share price went from 1670 down to 1565 in about 5 or 6 minutes. That's, in my opinion, just a dump. And then the share price recovered because there's no one else dumping. You just see the volume too during that period, just dumping on market. I'm going to say that right now. So a pretty good day for Technology One. But when you do look at the daily chart, the share price really has to get above $17. And the share price is right on or right near $17 right now. And the reason should be obvious why $17 is important for Technology One. It has struggled to get above that level since April of last year. So over a year. Or was that May? 29th of May. So just about 1 year ago, it hit $17, pulled back, and has had trouble to get above that level ever since. Aroa Biosurgery released their full-year results. I didn't expect much from this company. So Aroa Biosurgery, I don't really look out for this type of company's full-year financial year results, full year or half year. What I'm looking for is their quarterly statements or their quarterly cash flow reports. And so for any company that releases Appendix 4Cs or 5Bs, I prefer that over the half year or full year, and share price down a little bit. But have a look at this daily chart. Share price in a well-defined downtrend. Share price has fallen from $1.24 to 49 cents, and no end in sight just yet. I do know this company is quite popular, not only among viewers of this channel. It was the most popular pick when I did ask the viewers of this channel to pick which company they thought was going to outperform the market, I think, in this year. And even among some of the fund managers, this was a popular pick. Unfortunately, the chart and technical analysis is just telling me stay away from this company just yet. It's not profitable, doesn't generate any cash flow, and I need to see that. I think maybe the market needs to see that as well, and maybe the market wants to see a little bit more momentum in this company. But definitely one to put on your watch list. I have this company on my watch list, and I'll keep on following it. Another company that has done really well over the past, say, 6 months is SKS Technologies. Look at that chart. Well, it really broke out in November when the share price was about 20 cents, and it has quadrupled since then. Company's share price is down a little bit. The thing I am intrigued by this company right now is because if you look at the announcement, just the title of their announcement, they mentioned 2 important words: data center. So data center, audio visual wins, an increase in CBA facilities. Don't care about the increase in CBA facilities. Data center. And just before that, 2 weeks ago, they won $11 million of defense contract. Seems like there's a lot of momentum behind this company, and that's why the share price is in a beautiful uptrend. And I am thinking of just taking a bit of a nibble in this company. I'm waiting for maybe a little bit of a pullback. I'd love to see a pullback. We saw a pretty sharp pullback back on the 8th of May, but that didn't last very long because the next day the share price was up 16.7%. Next on my list, so there's a lot of companies here. We have Atomos. Do I even have to show you this? So they're back to trading now. Last time they were traded was 21st. No, that's today. 27th of February 2023. Maybe there was one day after that. In fact, you can tell. Oh no, you won't, because CommSec only looks at the last year of trading. So no records found because I haven't traded in the past year. If you look at their chart, you'll notice a massive gap. Have to look at the 5-year chart, no, 3-year chart. You notice there's a massive gap. Not the 6 months. I said 3-year. There was a massive gap there. You don't see that massive gap in Trading View. They do it a little bit differently. And yeah, so somewhere in February, where's the date here? 27th of February. When they released their results, must have been, this company went to a trading halt. They needed to raise capital at a fairly big discount. Where is it? Somewhere here. If you have a look at their quarterly cash flow report, this company is doing that now. This company had a lot of promise a few years ago, but $8 million receipts and operating cash flow negative by 3.7 million. Now, there is possibilities. This company is looking cheap right now, but I don't know because I would have to do some mathematics, some financial calculations, that sort of thing. And I think the share price might be quite volatile moving forward. Share price 2.3 cents, has been as high as 3 cents and as low as 2 cents today. So you could have bought at 2 cents if the low was first and sold at 3 cents and made 50%. That's why these type of companies are attractive to day traders. You could have been a day trader and made 50% your money just on this company just today if you timed it perfection, which is hard. So it's Atomos. Next one on the list is Australian Clinical Labs. But this was just reaffirming guidance. So do we really have to talk about Australian Clinical Labs? Reaffirming guidance? I'm pretty sure it was this company, yep. Share price is flat, but then have a look at the chart. Share price in a downtrend, a well-defined downtrend that has lasted a few years. So I actually was a shareholder of this company way back here, somewhere in here, back in 2021. It was never going to be a long-term hold. It was just play the thematic at that point in time. This company is was a beneficiary of COVID-19. Those benefits, those tailwinds came to an end, and that's when you just had to get out. This company, along with one of the other companies on the top 5 announcements, Sonic Healthcare, and the share price just keeps on falling, and looks like share price of this company is at an all-time low, even though share price is up today by 1 cent. And then we have JMS, which I've already talked about. And let's have a look at JMS, which is Jupiter Mines. See if someone has dumped on market. Not really. I'm going to see if I can see my bid. No, you've got to see orders, not to cause a sales. Try to remember what my bid size. Oh, there it is. 3,125. So times 3,125 by 32 cents, you get $1,000. Yep, that's all I'm buying or want to buy in this company. It's just a nibble, And then if I do get another technical signal, I'll just add to that. And if I don't get a technical, if it doesn't go in my way, the trade, then I can sell out at a small loss, or smaller relatively. But if it goes my way, I can just add to my position. That's what I want to do. That's what I'm trying right now with some of these companies. So it's that. There it is. It's not far there. Okay, so let's have a look at the top 5 announcements of the day. And we'll start with number 5, and that's Sonic Healthcare. And we have seen a little bit of a bounce today with this company. So down 5.52%. At one point in the day, it was down as the share price was down as low as $23.58. So it's gone up $1.56 since the low. So congratulations to those who bought near the low. And I would suggest that there have been some value investors who did see some value in this company today because of the share price performance and a nice little rally in the share price. So they did release a negative trading update. They've called it earnings update, but it is negative. And the main things I like to look at in these sort of earnings updates or tradings updates is reasons. Is it something wrong with the company, or is it just macro issues that might peter out soonish? All right, so they did grow. So organic revenue growth continues to be strong at 6% for the 4 months to the 30th of April, following 6% in the first half. However, now we get to the negative bit. However, profit growth has been lower than expected. So again, it all comes back to expectations. So you might have thought that 6% growth was pretty good, but the market might have thought it should have been higher, or it was going to be higher. And if the market sees the results of a company lower than their expectations, the market will punish that company. Hence, Sonic Healthcare's share price is down. Now we get to the reasons. Part due to inflationary pressures on the business. Now that could be a sign this company has no moat. They have no pricing power. That could be an argument. And exacerbated by currency exchange headwinds. I'm not sure if the company can control that or have any say in that, unless maybe they do hedging. And I don't know if companies like this would do hedging. In addition, a number of margin improvement initiatives planned for completion in this half have been slower to deliver than expected and will contribute to further earnings growth in financial year 25. I don't mind those sort of things when something's going a little bit slower than expected, if it plays out like it should. If it's just an excuse, I don't like that. And it's really hard to decipher whether it is just an excuse or if it really is going slower than expected. And they also mention here inflationary pressures are expected to ease going forward. Headline inflation rates in Sonic's main markets are reduced to a range of 1.4 to 3.6%. There you go. So that's why share price of this company is down 5% today. Now let's have a look at a chart for Sonic Healthcare. Is this getting to interesting levels? And I have to admit, I think this company is getting to interesting levels. And in fact, the one-day candlestick looks pretty bullish. A really nice shadow below the main body, which is telling me there is people buying. There is more demand for shares than there is supply. So all those negative Nancys out there who are shouters think this is a dog company. They're dumping their shares on the market. There's enough supply to meet that demand, enough demand to meet that supply, and even more so, hence the share price is rising. Now, share price is in a downtrend, but I also want to see if the share price is at any support levels. Now, the last time the share price was this low was way back in April 2020. So we're close to March 20 lows. And in fact, if you go pre-COVID-19, the share price was higher than this. So you have to go all the way back to the start of 2019. And I think just that alone, just by comparing where the share price is right now to pre-COVID, I would say and argue that there might be some good value in this company. Now, the dividend yield, 3.9%, price earnings ratio, 24.9. I think there could be some value. And I think that's the reason why we have seen a bit of a bounce. Just value investors seeing some value in this company, and I probably don't blame them. Because I think I would probably argue this is another quasi high-quality company. And don't have to do any research on this company. Just look at the chart. So this is a weekly chart going back to 2012. And this is the telltale signs of a high-quality company. That chart between 2011 and 2022. Share price in a beautiful uptrend. Some tailwinds had helped that, particularly 2021 into the start of 2022, not only 2021, but then the company faced some headwinds. And these headwinds, I think, are not structural problems with the company. They're just macro things, and these headwinds will die off, will weaken, will peter out, or become zephyrs sooner rather than later. If you don't know the meaning of zephyr, have a look at it. It's gentle wind. Instead of a gale force headwind, it's just a gentle headwind, and we can all handle gentle headwinds. Zephyr. Great word for a wind. I should use that more often. Anyway, so I think this company is definitely looking interesting at these levels. So that's coming in number 5. We have Sonic Healthcare. Coming in at number 4, we have another negative announcement, and that's from Enero Group. I had put this company onto my watch list because it looked like the share price was trying to consolidate. We'll be able to look at that when we see the chart. Trading update. As soon as I see a company releasing trading update, I am going to have a look at that company because depending on whether the update is good or negative, we could see the share price rally 20% or drop 10, 20, 30, even 40%. Now, based on the share price movement, we know this is a negative announcement. So it is. Although, and you can see it in the commentary, you don't even have to look at any numbers to know this is negative. And this is the reason why. This is their commentary. Although Enero, so that's a bad first word, although Enero continues to be impacted by challenging market conditions in the global technology sector. So in this case, maybe the although is not a bad word. The group's Australian agencies are performing well, achieving double-digit revenue growth on the prior corresponding period. While the overall group result continues to be impacted by a global downturn in the technology industry and ongoing macroeconomic headwinds. So again, macroeconomic headwinds. This company, I would say, is cyclical. So this is definitely not a company you own for the long term. But when those headwinds turn into zephyrs and then finally tailwinds, this could be the company to own. I have a feeling this company has a market cap of about $100 million now. And that is attractive to me. And that's another reason why I put this into my watch list, because when the winds turn favorable, I think this company could go on a pretty big run. Now, I did notice, market cap 137.9 million, I did notice in one of the announcements, they are selling probably the part of the business I like the most. So OB Media. So they were talking about selling ad tech platform OB Media. Pretty sure that platform had some troubles recently or something. But I had a look at this company quite a few years ago, and that was the thing that attracted me about this company. So they're a marketing, technology, and communications businesses technology or something. So let's have a look at the chart for the company, a negative trading update. And I'll just show you, I won't show you the weekly chart, so we'll have a look at the daily chart first. Actually, the weekly chart might show you the bit of cyclicality there. But if you have a look at the daily chart, share price has been a well-defined downtrend. But I was thinking the chart was showing signs of wanting to, or the share price was showing signs of wanting to move into at least a consolidation period, at best a breakout, possible breakout. It tried back in March, late March, early April, failed, and it needs to get above about $1.90. But unfortunately, today's announcement has put a bit of a dampener on that plan or that strategy. But in looking at this one-day candlestick, again, we have a nice little shadow. So there has been buying when the share price got below about $1.40 or so. That's sort of understandable. Why is that understandable? Let's go back to the recent low and just do a line. So the share price has bounced off, or very close bouncing off, those lows we saw back in June of last year. But I think this consolidation period has way more to play out. And if the share price does break below about $1.35, we'll say, that would be bearish. If it breaks above $1.90, that would be bullish. By this point in time, I'm saying clear of Enero, because it's a negative trading update. So that's coming in number 4. Coming in at number 3, we have possibly this should have come in number 2. And I wanted James Hardie to come in number 2 because it's a bigger company. And OFX Group up 16.5% on their full year results. Now, I will be honest with you, I did not have a look at these full year results in depth, but they did look pretty good. So than expected. And they also had an outlook section here. And here it is. There's some good commentary in the outlook section that I did like. So OFX Group expects to grow NOI at least 10% per annum with an underlying EBITDA margin of 28 to 30% over the next 3 years. And they also, the commentary from the CEO and managing director was pretty good too. I liked it. So I liked it. The market liked it. I thought it was fairly bullish, the outlook. And I think that's one of the reasons why the share price has gone on a run. The market likes it. So let's have a look at the chart for OFX Group. Another company I've traded in the past. So I wouldn't necessarily call this company a high quality company. So back here is where I traded. There it is. There's my buy. I still got my buy in it. $1.33. You can see why I bought on that breakout. Almost similar to this one. So back then on the 18th of May 2021, we're talking about 3 years ago, share price rose 8%. So not quite as good as today. And then the share price went on a nice little rally. You'd see a nice little pullback. Could have bought that pullback there. Share price went on a rally, and I forget where I sold. I should mark where I sold as well. But again, the share price was only in an uptrend for a while. Then it went to a downtrend, and then, well, yeah, it's been a downtrend ever since. This could be a breakout. Why is this a potential breakout? Positive financial news, higher volume than usual, and the share price at least a 6-month high. In fact, the last time the share price was this high was back in September of last year. So definitely had a 6-month high. And this looks pretty good. And the other bullish thing is the candlestick. This is a very bullish one-day candlestick. Those green solid bodies, no shadow to above the body. That means the share price opened near the low of the day. And if the share price doesn't drop off much now, the share price will finish at the close of the day. That's of course it's going to finish at the close of the day, and the share price will close at the high of the day. So open near the low of the day and close near the high of the day, if not the high of the day. That's a really bullish one-day candlestick. It looks like OFX Group is going to see that now. So this is definitely a trading. I was put this onto my watch list right here on the 14th of March. Share price on that day rose 6.6%. I thought this could be the breakout for OFX Group, and then it failed, and then share price rallied again, and then we got today. So I just took a little bit of time because there would have been some shareholders who just wanted to get out on the 14th of March because the share price rallied and they bought at high prices back in July, August last year. And today, we're still in a bit of a resistance area zone because all these shareholders who bought in during 2023, they want to get out of this dog stock because that's the mentality of a lot of investors. As soon as they buy shares in a company, they need to see the share price rally almost immediately. Otherwise, it's a dog stock. That's the mentality these days, it seems like. Anyway, I've heard that by a few people, by the way. OFX Group coming in at number 3. Coming in at number 2, we have James Hardie, share price down 13.95%. So straight away we know whatever they released was negative. And they released their 4th quarter results. This was negative. And I actually did have a quick... my first complaint about James Hardie, they released one announcement and they packed everything into this one announcement. That's why this one announcement is I should have opened this first. I think I did. That's why this announcement is 240 pages long. Please, James Hardie, separate everything into different announcements. So a lot of other companies release 4 announcements when they release results. You release one announcement and just put everything together. But doesn't mean we have to read all 240 pages. Now, the interesting thing about this company's quarter 4 results is found here. The numbers you need to know is the adjusted net income, because they did give some guidance. So for the full year, an adjusted net income of 707 million. And for the half year, or for the 4th quarter, adjusted net income was 174.2 million. What was the first one? 707.5. Now let's have a look at the companies expectations for financial year. Is it financial year 25? It must be. For financial year 25. It's somewhere here. Here it is. Outlook and earnings guidance. So when a company like James Hardie releases their results, it's mostly about the outlook and earnings guidance. In fact, I don't care how they performed in this particular quarter or this particular full year, unless it significantly was below expectations. I focus mostly on any outlook the company gives, and the company gave their financial year 25 guidance. For the first quarter and for the full financial year. So for the first quarter, they expect adjusted net income to be between 155 and 175, which means unless it's the top of the range, the absolute top of the range, adjusted net income will fall quarter on quarter. And for the full financial year, they're expecting adjusted net income to be between 630 and 700 million. Remember, for this year, adjusted net income was 707.5 million. So they're actually forecasting, even though they have a range, they're actually forecasting to the highest probability that adjusted net income in this financial year 25, will be lower than financial year 24. And they call themselves, in this particular announcement, a growth company. Well, maybe some macroeconomic things are going against this company. In fact, they do mention up here, the outlook for the housing markets we participate in globally continues to remain uncertain. In our largest market, North America, the external data providers we utilize expect our addressable market to decrease 2%, with a range of down 6% to up 3%. And I believe they were down, if I remember correctly, somewhere else in this presentation. So that's why the share price or the market has punished James Hardie, is because they have outlooked, have given guidance for a fairly weak financial year 25. I don't think the market wanted to see that. And let's have a look at the chart for James Hardie. And this is the complete opposite to a breakout that you want to buy in unless you're shorting. This is the antithesis of OFX Group. And I would be getting out if I held any shares in this company right now. And again, look at the one-day candlestick. This is, instead of bullish, like we saw with OFX Group, this is bearish. A solid red handle, really bearish. Now let's have a look at the weekly chart. Maybe there's some sort of, yeah. Now, if you do actually look at the weekly chart, maybe even the monthly chart, share price is from the bottom left to the top right, which is a sign of a high quality company. But again, I think this company has some signs of being cyclical at times. I think most companies do have this, but I think this company is more cyclical than other companies. But overall, the company will grow through time. And I think the time to buy this company is when there's a lot of headwinds, and those headwinds are starting to taper off and turning into a zephyr. And right now is not that time. Hence the share price and the chart looks pretty weak. James Hardie, number 2 announcement of the day, share price down 13.95%. Coming in at number 1, we have Findi. I wouldn't be surprised to see the share price only up 20% or maybe 30% or even 15%. I would expect a little bit of volatility in the share price of this company, and it's up 25.99% on the back of the company releasing their full year results. Yesterday, the company went to a trading halt before trading began, and the whole trading halt, I think I did mention this in yesterday's video, the whole trading halt was odd. I've never seen the reasons they gave for a company going to a trading halt. So they went to a trading halt, pending an announcement by the company to the market in relation to an update on the company's financial year 24 financial results. It's not really an update to the company's results. It's actually, they released the results. And I don't know, maybe they were concerned that people knew the results and that could really have an effect on the share price before they release them. Maybe they just knew. And you can just see by the share price, the market has reacted really well to these results. Let's have a look at the presentation. For those who don't know, I am a shareholder of this company. I've been a shareholder of this company through numerous transitions. In fact, they've changed the name twice before, and I was just fortunate that I just owned shares in this company when they've made this transition. ever since I owned this company, they did have a stake in this other company that owned, I think it was a 25% stake in this company that owned Indian ATMs. And that's really the business of this company, ATMs in India. And they're doing a pretty good job. Okay, so, and this company has a market cap of about 160 to 170 million. So keep that in the back of your mind when you look at some of these numbers. So revenue of 66.5 million, in line with guidance. EBITDA of 27.4 million. So the company's trading on about, we'll say, 6 times EBITDA, which is not a screaming buy. Significantly above guidance of 24 million. So that was the only result that beat guidance, because profit of $4 million, in line with guidance of $4 million, as one of India's largest non-bank ATM operators. I think they do want to diversify as well, but I just know this company as an Indian ATM operator or owner. The other interesting thing, so they're talking about EV to EBITDA. Apparently it's 4 right now, which seems really low. It is low, EV to EBITDA. So you could argue this company is cheap. So the numbers didn't beat guidance all that much. The market just loved this company. I don't remember seeing all that much guidance. Operating cash flow was 26.7 million. I believe free cash flow was about 20 million. So that's pretty nice free cash flow for a company with a market cap of 160 million. Free cash flow bridge. Net debt. So they do or have net cash, 37.6 million. So it means enterprise value is about 40 million. We'll say about 130 million. So that's how they get the EV EBITDA, 130 divided by about 27. So that's, yeah, that's roughly 458. Well, it's about 4 and a bit. Traditional ATM business. But the one thing I didn't see was an outlook, unless I completely missed it. And just, I'm a little bit surprised the market has run on these results. Now, they did beat EBITDA guidance, but revenue and profit were to expectations. So for some reason, the market really liked this announcement. It is interesting, intriguing to me as a shareholder, why the share price has run up by a fair bit. Now, if you have a look at the chart for Findi, now I have taken profits, but I did not completely sell out. And the reason why is I just wanted to lock in some profits because it was becoming my largest holding in my portfolio. And I just was not comfortable this company being my largest holding, not the company that I would define as a high quality company. I want my biggest holdings to be high quality companies, not this type of company. So I'm happy to take some profits. And if the share price runs, then eventually I might have to take profits again. If it becomes, again, my largest holding, then that could be a mistake, because if the share price is in a beautiful uptrend, why sell? So that's one thing I do have to maybe think about. Why sell if the share price is an uptrend? They've had the buy the dip opportunity. Well, this is a buy the dip opportunity. The share price has taken off. And probably my best decision in this company is to exercise my options at 90 cents back here in January of this year. I did exercise my options. I had a few options at 90 cents. Share price actually at one point dropped below 90 cents, I think briefly. And then I had to call Net Wealth and tell them, exercise my options, please. First time I have ever owned options, and first time I have ever exercised options. So thank you, Findi. Really good volume as well. And even though this one-day candlestick is not quite as bullish as OFX group, and not quite as, well, can't say bearish because it's not a bearish. And the reason it's not quite as bullish is because there is a little bit of a shadow. And the reason it's a shadow is because the share price has pulled back a little bit from the high of the day. Current share price is 383 and the high of the day is 391. If you have a look at OFX group, it might have changed now, but you'll see the high of the day, $2, share price $1.99. Share price is right on the high of the day. Right on. And $2 might be a bit of a resistance zone. I would expect $2 to be a resistance zone. Slight resistance zone because of the whole number. And it's double $1, and $1 is a big resistance zone. And I would say if anyone bought this company at $1, they go, oh, I've doubled my money. I'm going to set out and take my profits at $2. let's have a look at the you can see it plays out perfectly. So have a look at the sellers. So 199 we have 5,800 volume, 199 and a half 2,400, at $2 54,000, and then $2.01 22.6 thousand, then dries up again. So just by looking at the buyers and sellers, you can see round numbers being a location where a lot of buyers and sellers put their bids in. It's a round number. Don't have to do any maths. I want to buy $2,000 worth of shares of this company at $2, 1,000 shares. Voila. Anyway, so good day for OFX script and good day for Findi. And that's all I'm going to have for today's video because we only have 8 minutes of training left. So, yeah. And a little bit of weakness since I started this video. A little bit of weakness, but that's okay. And that is all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye. Last thing I'm going to do is just see if share site. It might be down now a little bit. Yep. Damn you. Bye.